Get a sense of what the outlook for the banking sector is. We are joined by MD Malia, who's Chairman and Managing Director of Bank of Baroda and also Chairman of the Indian Banks Association. He joins us on the show. Now, Mr. Malia, to begin with, the RBI has indicated that interest rates have peaked and soon it will actually start cutting rates. Now, in this backdrop, how much of an easing by the central bank are you expecting, and by when do you believe the first rate cuts will actually come?
It's difficult to put a timeline as to when the first rate cut will come. But still, looking at the overall macroeconomic conditions, I think inflation has slightly come down, and therefore one could expect a little bit of a moderation on the inflation, and therefore going by the RBI stance, one could expect a moderation as far as the interest rates are concerned. Maybe in the next 3 months one would see a little bit of a softening as far as the overall scenario is concerned.
Now, Mr. Malia, recently one of your competitors, Union Bank of India, cut its base rate by 10 basis points. Do you expect base rate cuts across the board, or would you say it's too early? And also, how about Bank of Baroda?
No, I think it is too early to make a comment as to whether all the banks will be following the Union Bank's policy of having reduced the rates, even though to a small extent. Now, the RBI third quarter policy, is likely to be announced on the 24th of January. I would rather therefore look at the guidance from the RBI in their policy statement before taking any further view in the matter.
Afternoon, Mr. Malia. Now, while most of the banks may miss the RBI's forecast of 19% credit growth, what are your own targets for credit growth this year? Are you confident of achieving the projected 19%?
See, RBI has given an indication that the current year overall industry credit growth will be to the extent of around 18%. If you look at the year-on-year growth till now, I think by and large the banks have been growing at about 17 to 18% growth. We are in the midst of the busy season. Another 3 months are there as far as the current fiscal is concerned. I am reasonably confident that one would be able to see an overall credit growth of 18% as far as the industry is concerned. The Bank of Baroda normally does grow maybe about 2% more than the industry growth. Keeping that in mind, my expectation for the current year would be around 19 to 20% credit growth for Bank of Baroda.
And how about your deposit growth target? Do you believe the deposit rates have peaked and from here on there will rather be a cut in deposit rates?
On the overall growth front, I think we should be able to record a growth of around 20% as far as the deposits are concerned. Now, interest on deposits, I think at this point in time we have seen the interest rates going up, and therefore keeping in mind the overall scenario, I don't expect the interest rate to grow further up beyond what it is today. But then looking at the overall stance of RBI, there is a possibility that interest rate on deposits also could moderate as we move along.
Now, Mr. Malia, there are concerns on the quality of assets, and even the central bank expects that NPAs could rise further in FY13 for the overall banking system. What's your own sense, and can the infrastructure sector, especially power, also real estate and agriculture, be some of the stress areas as most analysts are fearing? To top this, there is also a strong likelihood of restructured loans of 2008 beginning to turn bad. How much of an increase in gross NPAs are you expecting for the sector as a whole?
See, basically one is passing through a cycle of deceleration as far as the economic growth in the country is concerned. Therefore, the natural corollary is that one could expect a little bit of a stress as far as the asset quality is concerned. That is for given. So therefore, if we have seen in the recent past a slight increase in the overall NPL levels, I think it was more than expected that it would happen. So therefore, going forward, my expectation is that asset quality could be still under stress. There could be a slight increase as far as the overall delinquencies are concerned. But then I think the banking system is capable enough of absorbing the incremental NPLs. So therefore, it is a manageable level of NPLs. But then stress, yes, it would continue for some more time. We have been restructuring the assets in the last couple of years, again, which is but natural when there is an economic deceleration. But then the restructuring is done on the basis of the continued basic viability of the unit. In such a scenario, I don't expect the accounts to go bad, Maybe the income streams, there is a deferment and therefore there is a restructuring and the reschedulement. But then basically these assets are viable and therefore it will not ultimately result into a sort of a impaired assets as we move along. Therefore there could be a temporary aberration and therefore there could be a restructuring. But then when the income flows start in, when the economic activity grows up, I think one would see a much better overall asset quality portfolio in the days to come. Now therefore the restructuring which have been done by the banks, maybe in the years 2008-9, I think whatever which was to go bad and turn into NPA, I think we have seen that. Therefore to my mind, overall situation continues to be with a little bit of a incremental delinquency as far as the assets are concerned, but then still manageable, and therefore overall I don't see much of a panic as far as this is concerned.
And Mr. Malia, what are your expectations on the net interest margins for banks as a whole? Do you expect further pressure on margins in FY13, and at what levels would you like to sustain Bank of Baroda's margins at?
I think NIMs have been under pressure in the recent past, but then the banking industry has been able to manage reasonably well. So going forward, therefore, the pressure would continue, but then still I would think that we should be able to have reasonable margins which will take care of overall surpluses as far as the banks are concerned. Bank of Baroda has been able to do reasonably well in terms of protecting its NIMs, or rather increasing the NIMs to a little extent. I think on a global basis our NIMs have been above 3%. I think that was the guidance given. I would expect that to continue. On the domestic front, the NIMs have been much stronger at about 3.3, 3.4 levels, much better than the guidance of 3.25% given. I think we would be able to protect that going forward.
Also, Mr. Malia, the government plans to infuse around 16,000 crores of capital into the PSU banks this year. How much are you expecting to get and by when?
See, as far as the capital infusion is concerned, the government had indicated that they would increase their holding in banks like Bank of Baroda to 58% from the then existing 53%. Last year, it was increased from 53 to 57, and therefore in the current year, we would expect a further increase of capital to take the overall government holding to around 58%. We would expect a contribution of around 775 crores from the government to take their overall holding to 58% by March 2012.
And finally, Mr. Malia, you've got many banks who've hiked their savings deposits rates to as high as 7% and even NRE rates to as high as 10%. Do you believe larger players such as yourself will be forced to raise rates on saving deposits? And also, are you seeing NRIs move funds into India after the NRE rates were hiked?
See, as far as the saving bank rate is concerned, I think most of the larger banks have continued with the existing rate structure. It is too early to say whether we would be able to change it or not, because ultimately savings is a product where banks do give lots of facilities, including a check facility, and therefore there is a lot of administrative cost involved in that. And for the customer also, it is a convenience product where he can draw the funds by issuing checks. Therefore, immediately whether there would be an increase in the saving bank interest rates, it is difficult to tell. NRE front, of course, all the banks have increased the rates to even to about 9 to 9.5%. It could perhaps fuel incremental inflow of funds as far as the system is concerned.